Hello traders, welcome back to the channel. This is Vishal and you're watching the weekly sectoral analysis. Well, in my previous video, if you remember, I had clearly shared with all of you that Nifty is trading at a very important support zone, and this is that particular support zone. You can see this entire horizontal band, and the coordinates over here are 21,898 to 22,130, and this entire support band is also the 23.6% Fibonacci retracement in the weekly time frame. Plus, if you can clearly see that we have this candlestick cluster. This candlestick cluster is giving a lot of support to the price, and that is the reason if you just check the daily time frame chart, multiple times price has been able to bounce back, and it has been able to bounce back pretty confidently. So many times it is happening, so many times. It is not just one or two times, but it is multiple times. Okay. So this clearly shows that this entire base, which is the same base, is a very strong support. Now, if you have a look slightly in the shorter term time frame, which is the daily time frame chart, one thing which we can see is that the lows of this previous two lows, 1 and 2, and this 3, uh, yes, this particular low is slightly higher than the previous one, but it is almost at the similar level. Generally, when we have a uptrend, we do have a series of higher highs and higher lows. But over here, we can clearly see that the lows are at almost the same level. Generally, when this sort of information is displayed on the chart, this is a sign that we are overall in a very choppy market in the short term. And the outcome of this choppiness, whether the breakout will be on the upside or whether it will be on the downside, the chances are like 50-50%. But again, if you have a look at the weekly time frame chart, the bigger time frame chart, it is showing that the trend is up or maybe the price is at a support. So if you take cues from the bigger time frame, it seems that if we do not break these lows, this particular low of 21,800 or 21,700, then there are decent chances that we can move higher. Now, this is what technical analysis is saying. But guys, there is one more bigger event coming up. One of the biggest events which comes up every few years in India, which is the Lok Sabha election outcome. And generally, when this election comes, we do have a movement, sharp movement in the market, which is a price shock. And generally, price shock is a type of movement in the market where none of the traders actually know whether that movement will come on the upside or whether that movement will come on the downside. No one knows about it. Okay. So my first thought as a trader will be to safeguard my portfolio. Yes, I can see a few of the stocks which can move up or down, but you need to be very sure that are you ready to risk your own new money in this environment, and just in a matter of few days, maybe a fortnight or so, the election results will outcome. The outcome will come. Now, it can also happen that if you do not take any trades and if the market flies on the upside, you may be left out. And if you do not take a trade and if the market crashes, say for example, if it does happen, then your portfolio is safe, you are safe. So as a trader, that is the call which you need to make. And I would always say the first thing is do not have over leverage or even leverage positions in your market. First thing is that. Second thing is if you're taking positions, be sure that you're minimizing your risk. And say for example, if you're having at a time, say 6 to 8 trading positions, then minimize it to maybe 3 to 4. So even if the market goes up, you'll make slightly less money, but your portfolio is safeguarded. And if it crashes on the downside, you're losing less money. So this is the time to understand that no one knows on what side the market will move. But yes, as per technical analysis, it's clear that if you must have seen my previous video, I clearly shared my view that we need a breakout above 22,550 or 22,600. We can see a big green candle over here, but this big green candle has been able to close just at 22,518. So we need a big green candle closing above 22,600. If that happens, then yes, we can move towards 22,800 and 22,850 or probably even higher. Okay. Let's have a look at the Bank Nifty. Bank Nifty in the daily time frame chart, it is slightly better poised because it has continuously been seeing a series of higher lows. Okay, it doesn't have the same type of pattern which a Nifty has. So overall it seems fine, but if you check the hourly time frame chart, it is trading at a resistance. This is a resistance, and the same resistance I had shared in my previous video, and that is the reason you can see some sort of selling which has come up. Now this resistance band is from 48,165 to 48,569 or 570. So in case if we have a big green candle which closes above possibly 48,800 or specifically 48,900, then yes, a decent short-term breakout in the Bank Nifty futures is possible, and probably Bank Nifty futures might try to go higher. All right, now let's go ahead. Let's have a sneak peek at the PSU banking pack. Now in the PSU banking pack, I should say one thing, that we do have a negative divergence in the PSU banking pack over here. You can see we have a higher high over here in the price. I'll just convert it to a line chart. We do have a higher high and we have a lower high in RSI. The answer is yes, we do have a negative divergence. But after this negative divergence, you have not seen any confirmation from the price that it is ready to break its previous low. So this is the previous low and this is the current low. So we are still maintaining that stance that we are maintaining a higher high, higher low formation. So in case if the market wants to correct, first sign is that it will try to close below 6,800 or maybe even below 6,700. That's the best number. If it continues to consolidate, if the PSU banking continues to go sideways, consolidate, then maybe it is a sign that it is in a choppy market, and after consolidation, probably if the negative divergences get negated, then after a breakout once more you will see an up move coming up in the PSU banking pack. In the private banking pack, I would say that somehow this particular stock, HDFC Bank, I had my positive view on it, but somehow it didn't turn up, and it's not necessary that every time each and every view of yours is going to work in the market. No, it cannot happen. So as of now, it has not worked out, but let's wait. It has crashed, but it has not been able to break any major support. So let's wait for a few days and then we'll get back to it. But as a sector, as a holistic approach, I would say that in case if it wants to go higher, the first thing what it needs to maintain is sustain below this, sustain above this, which it is maintaining, and then probably start trading over 24,400, 24,600. Then maybe some sort of positivity will be visible in the private banking pack. Energy pack. Now energy pack, I have been maintaining my stance very clearly since probably many weeks, not just days, but many weeks, that we can see a very big rally in this particular sector. And after this particular big rally, we do have this consolidation, which was required and which I have been continuously saying that it needs some sort of consolidation. Well, suddenly it is visible to me that there are a couple of stocks which are now probably ready and they're trying to go higher. One of them is Reliance Industries. It is taking a support from 127.20% Fibonacci extension. It's trying to go higher. And it needs a breakout in the hourly or the 2 hourly time frame chart over here. But you just need to understand one thing, that it has lot of resistance in this zone. You can see this resistance. Okay. So as a trader, you'll have to time your trade very, very cleverly. All right. So this is one stock. The second stock, probably according to my analysis, which can go higher, is Hind Petro. Now this particular stock, as of now, it went up, corrected, consolidated. Again, it gave a breakout. Again, it is coming down, and again, it's going sideways. So I guess as a swing trader, not as a positional trader, but as a swing trader, you need to keep your eyes open and do analyze at your own end this particular stock. If it gives a breakout in the shorter term time frame chart, then I think as a swing trader, you should not miss this stock. All right. Metal pack. Now metal pack has performed really nicely and it has outperformed a lot of other sectors in the market as well, and it's going great. As a trader, I don't think so you need to do much. Just keep on trailing your stop losses in this particular sector. Let the price go higher. And whenever your trailing stop losses are getting hit, just book your profits and get out of your trade. Auto pack. Now, this particular sector, you can see it has been continuously going up. It has no problem from a negative divergence or overbought reading or whatsoever. If you have a look in the monthly time frame chart, you will be even more surprised because the monthly time frame chart RSI is well above 80. Okay, and you can see continuously it's going up. So it's overstretched, but it continues to move higher. So as a trader, I would say there is one stock which has not performed very nicely recently, but that particular stock is trying to now bounce back from a previous support. So as a positional trader, you can keep a watch on this stock, not as a swing trader, as a positional trader, right? Finance pack. Finance pack, if you have a look in the weekly time frame chart, it is more or less in an uptrend, but there is no momentum. There is no momentum. Just this green candle is giving some positivity to it, but I guess it needs to little bit more higher. Yes, I can understand that the finance pack is maintaining its stance of higher highs, higher lows. I can clearly understand, but it needs to go a little bit more higher to show its true character of a bullish sector. Consumer pack. Now, in this particular sector, we can clearly see that there have been, times when there have been negative divergences in this particular sector, but this sector has negated all of those negative views and has continued to rally. So as a trader, if you're holding stocks in this particular sector, you can continue to hold them. You don't need to sell. Just keep on trailing your stop losses, and once your stop losses get triggered, you can get out of your trades. FMCG pack. FMCG pack, I should say that it is trying really hard. It's really trying hard that it wants to stop this entire correction. It started at this point. It tried to make a bottom out pattern, tried to go higher. Again, it's coming down. After it came down, again, it's trying to form a hammer. It's trying to go higher. So probably it's consolidating. Maybe in next few days, we will understand what's happening in the FMCG pack. Infra as a sector, I guess this was recent chance, was a very good chance for swing traders to get along in these stocks. And the way it has gone up, it's really interesting. As a trader, if you have participated in any of these infrastructure stocks as a swing trader, probably it's a good time to book partial profits and then wait with a trailing stop loss. IT pack. Now, IT pack, if you clearly see in the monthly and the weekly time frame chart, first from the weekly time frame chart, it is trading at a 50% retracement of this entire bull run. And if you want to see it more clearly, we should actually switch it to a monthly time frame chart. It will look even more clearer. You can see that it is trading at a 50% retracement. Not exactly it has tested, but it's trading around there, and it is taking support from candlestick clusters like this one. First thing is that. Second thing is, if you have a look in the weekly time frame chart, in the weekly time frame chart, the data is slightly different. We can see that the sector has gone below 61.80% Fibonacci extension, and this week it has tried to close above it. So it's trying to play around with this particular previous zone of resistance, which is now into a support zone. So if it stays higher than this particular 61.80% extension of Fibonacci retracement for a longer period of time, the better it is for the IT pack. But will it turn up? Will it bottom out or not? I guess that is what only and only time will tell us. Pharma pack. Now this is an interesting sector as of now. Why? Because in the monthly time frame chart, you can clearly see that in the last 3 months, obviously this particular month is not completed, but if you just have a look visually, 3 candles, all small in size, overstretched reading, 78, 79, and you can see RSI going flat. Clearly shows that there is absolute no momentum in the pharma pack. It is consolidating, and if you have a look in the daily time frame chart, it is pathetic. It's absolutely sideways. But within this sector, there are a few stocks which are looking interesting. Out of that, one is About India. Okay, it's here, About India. So this particular stock, as a positional trader, not as a swing trader, as a positional trader, if you just have a look at this stock, first it rallied, tried to correct, then it's trying to go higher. And if you plot this Fibonacci over here, you will understand that it's taking support from this 161.80% Fibonacci extension. It has also given a trend line breakout in the RSI, and if it gives a breakout in the daily time frame chart with a proper big candle and all other confirmations, then I guess as a positional trader, you should not miss the stock. There is one more stock which I would like to share with you in the pharma pack, and that particular stock is Oro Pharma. Now, Oro Pharma, actually, I have shared this before. Okay, I have already shared this view before as a positional trader somewhere over here at 1136. Now it is continuing to trade around at 1200. So my view on this stock continues to remain bullish. As a trader, I would like to continue holding this stock with a trailing stop loss. If it goes a little bit more higher, maybe 4-5% higher, then yes, I would like to book partial profits as a trader. And overall, this stock looks great for holding as a positional trade. Going ahead, in the PSE pack, I can clearly say that it has performed pretty nicely for the short-term traders. This particular bounce back has worked pretty nicely in the favor of the swing traders and the short-term momentum traders. Probably a really good time to book partial profits, at least 50% or higher, and then wait with a trailing stop loss. Reality pack, almost same view like PSE sector. It has rallied pretty nicely in the favor of the short-term traders, swing traders. A very, very good time and an important time to book profits. It is always better, as whenever a big event is coming up in the market, and if you have stocks in your portfolio where you have booked partial profits, 40%, 50%, 60% or whatever, and then if you are entering into that particular event, you will feel mentally pretty light. So that is my view on this particular sector as well. And in mid caps, again, it seems that it has been able to rally pretty nicely, continuing its nature of a Dow theory uptrend. You can see this is the first low, second low, third low, and continues to maintain its higher high, higher low stance. As a trader, you can continue to hold the stocks, but please book partial profits. Do not be greedy and just hold your complete quantity with a trailing stop loss. Okay. So I guess I have shared my analysis, and my main thought process as a trader is that we are coming very, very near to a very, very important event which comes in the Indian financial markets one every few years. And generally there is always a price shock which probably no one can predict until and unless you're God. So I would just say one thing, that yes, you can continue holding your stocks as a portfolio, as a trader, but you need to understand that you cannot take extra or very high risk as a trader in your trading portfolio. You need to minimize your risk, avoid taking over leveraged or even leveraged positions. And yes, if you're holding stocks from lower levels and they have run up pretty nicely, then I would suggest that booking some partial profit is always better, that you can enter into a event where you don't know what is going to be the outcome in the stock market. You don't know whether you will see a gap up or a gap down. If you have booked partial profits, you will always be more comfortable mentally. All right. So I hope this video makes sense to you. And if you feel that this video has added value even to your own analysis, please do let me know with your comments below. Trade less and trade wisely. Thank you.